Uber Technologies, NYSE Uber, is flexing its financial muscle in a big way. The ride-hailing and delivery giant reported better-than-expected quarterly revenue on Tuesday and, in a bold show of confidence, announced a massive $20 billion stock buyback, the largest in the company's history. Uber brought in $12.3 billion in revenue for the quarter, handily surpassing Wall Street's expectation of $11.8 billion. That represents a 14% increase compared to the same period last year, signaling strong growth in its mobility division as global travel and commuting patterns continue to rebound. Meanwhile, Uber Eats, the company's food delivery arm, contributed over $3 billion. Despite rising competition from platforms like DoorDash and Instacart, Uber has managed to hold its ground through international expansion and strategic partnerships. CEO Dara Khosrowshahi didn't hold back on the company's direction. Uber is entering a new era of disciplined, sustainable growth, he said during Tuesday's earnings call. We're generating free cash flow, returning value to shareholders, and building a business that can thrive long-term. Perhaps the biggest headline of the day came with the board's approval of a $20 billion stock repurchase program. A buyback of this size sends a clear message: Uber believes its stock is undervalued and wants to reward its shareholders. Stock buybacks reduce the number of shares in circulation, often leading to a higher earnings per share ratio and, typically, a stronger stock price. Indeed, Uber's shares jumped more than 6% in after-hours trading following the announcement. Financial analysts were quick to react. One Morgan Stanley analyst called it a milestone moment, adding that Uber is no longer simply chasing growth at all costs but evolving into a financially mature tech company with a more balanced focus on profitability and shareholder returns. Others viewed the move as a strategic decision to boost investor confidence in advance of potential macroeconomic volatility or renewed legal pressure over gig worker classification. As Uber sharpens its focus and enters what executives describe as a new phase, questions remain. Can the company maintain its dominance in global rideshare markets? Will its underperforming freight business turn the corner? And how will Uber adapt if governments around the world move to tighten labor laws affecting its independent contractor model? For now, one thing is clear: Uber's message to the market is unmistakable. It's no longer just a fast-moving disruptor, it's a company with staying power and confidence in its financial future. Uber has arrived. Again, only this time, it's not just picking up passengers. It's picking up Wall Street, too.